Good evening, guys. I was wrong today in my midday analysis of the markets, which is interesting. I'm never wrong. That's a joke. Yeah, I was right and wrong. Let me explain. First of all, this is a bearish setup, and by that I mean you've got to retake the lows of the breakdown, which is indicated here by the white line, and we've unsuccessfully been able to do that on 3 days on lighter volume, which means that we want to come down here and retest the lows of Friday. That said, there are no buyers and there are no sellers. So if you dig a little deeper and look at the 30-minute, right? There are no buyers and no sellers. So we open the day today. We go up here. I'm always talking about volume, right? We go up here and the volume just stalls out. Look down here. There's just no buyers. It just literally stalls out going into these candles right here, right? Here's massive, massive volume of 28.9 million. Let's just call it 29 million sitting up here, right? We tried to break that with a piddly little 5.1 and failed and started to go back down. So, okay, the market's rolling over, it's giving it up. But the reverse happened below, right? So you're coming down into strength. And you look over here and you say, okay, yesterday we closed, and the close we did whatever that says. I got to get better lighting in here. Like 18 million shares, right? Something like that. And we tried to push down into this today on less than that, 9 million, so we bounced. So in reality, we're just trading sideways. It's not bullish or bearish. It's just we're trading sideways, which is why you never want to trade a range like this. Same thing with the QQQs. You could do the same analysis, right? We opened and obviously the NASDAQ was higher today at the open, and then we started on volume. Same thing. You look at these candles. You compare, I guess you call them candles, but you look at these volume bars is a better word, but you compare these volume bars to these volume bars over here, and you can do your own analysis and see this, but we popped up here on lighter volume, didn't have it, came back down, and didn't have it. So we don't have it on both sides. There's no buyers and there's no sellers. So that just means that the S&P 500 and the NASDAQ just continues to go sideways. We could go through stocks, but this is why, when you back out and you look at it, it's not worth trading this until it breaks. So as long as you're in between the highs and the lows of a candle like this or a range in a daily range, it's just trading sideways. We don't want to do anything until we break out or at least test the lows, or we break out or at least test the highs. That's where everything happens, right? And that's what we're going to do. So hope this makes sense to you. I try to use the right words to help you understand how detailed volume is. I mean, I don't want to belabor the point because it becomes redundant, but when you look at this carefully and you look at the volume, you could literally see where this is going. And if you were short from the highs, you would have been taking it off coming into here today because you realize, oh, the volume's drying up. We're going to get killed. We got to cover. Same thing when you went into the highs this morning. If you'd have been bought the open and headed higher, you'd have looked to the left, right? Because we always talk about looking to the left, and you thought, ooh, look at that wall of volume over here. Not there, but here. Look at that wall of volume over here. That's a lot of volume. We're really going to have enough power to get over that. And you weren't. And so you would have closed out your long position because it's a low probability trade. So hope that helps. Look at volume. It will never lead you astray. Have a good evening.